Hello, I'm Jensen Huang, the CEO of Nvidia. How is shorting my stock going for you bears? I can't just keep getting away with this, can I? My company has a forward profit to earnings ratio of 150. It's so overpriced. I am so lucky, am I not? First I shilled crypto and now I'm shilling artificial intelligence nonstop during earnings calls. So Nvidia has to fall soon, right? It's not like me and my crew are good at strategy and have been preparing for this trend for half a decade. Perhaps you prefer someone like Gunslinger. Yeah, how is that going for you? Intel doing great things, right? Wow, even Sir Jack a lot opened an Nvidia short and is planning on scaling in some more. I guess he likes being Sir Pegged a lot instead. You dumb fucks didn't realize that the US government, by banning my chip exports to China, pretty much declared that we have the best artificial intelligence chips. Now, this deepfake you are watching was made on an Nvidia GPU. Go on, keep shorting Nvidia. It's going to work out great for you.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks edged higher on Wednesday as investors counted down to Nvidia's highly anticipated earnings report, seen as a pivotal test for the tech-driven summer rally. Now, Nvidia's earnings are not represented in here in regular trading hours. Nvidia was virtually flat on the day. We saw the broad semiconductor complex trade higher. We saw software trade higher. The mega caps were also fairly positive, all except Palantir. This is a $400 billion company. That's a big component now of infrastructure. Absolutely crazy. But through and through today, we saw momentum that was very mixed, market price action that was very mixed, but price action that skewed more towards the upside, with the S&P 500 up 0.25%, and we continue to see smalls and high beta names outperform, with the RTY up 0.66%, energy up 1%, very strong bid in energy. That has to do with the price action we see in crude. We'll talk about it a little bit later on in the video, but today we saw a mixed bag. We saw staples in the top end of the fold, along with technology, real estate, energy, small caps, right? So high beta, sensitives, and to a degree even defensives were at the top end of the heat. Screams of risk on, but with the detractors from the market being industrials, which were up big yesterday, by the way, and then healthcare, which was, again, these weren't even down, they were just flat, down 0.05% and 0.01%, inconsequential, really. We saw gains across the board, mids, smalls, large. Large cap growth was the worst performer here, and it was actually just flat today. Everything else gained, with small cap value being the best performer, up just shy of 1%. There wasn't really any economic data, and the market was really just trending on a couple of news pieces we got with regards to the trade front. The European Union is looking to fast track the removal of tariffs on all US industrial goods, clearing the way for an easing of duties on EU auto imports in return. So we can definitely see there's been a lot of pressure put on the EU to get EU imports as low as possible from BMW, Mercedes, Audi, etc., because the US market is very big for them. So the EU have to remove some industrial tariffs, and then the US will remove some auto tariffs. On the tariff front as well, 50% tariffs officially are in place for India because they buy oil from Russia. Now, are we going to see $3,000 iPhones? Maybe. I don't know. We also know for a fact that Prime Minister Modi refused Trump's calls at least 4 times in the last couple of weeks. So there's no talking between the US and India right now. So India currently have a 50% tariff. Absolutely insane. And then we got this news here from China as well with regards to semiconductors. China seeks to triple its output of AI chips in 2026, and this is to stop its dependence on Nvidia and US semiconductor manufacturers. So China looking to become its own dedicated player in its own right. So there's definitely competition ramping up for Nvidia. And let's actually go ahead and talk about Nvidia's earnings, because this was the big market mover. Now you can see the stock was pretty much flat here today after the earnings, down about 3.36%. So nothing disastrous. The expectations were, very high coming into this print. The stock was up 100% from the tariff tantrum lows and pretty much trading at all-time highs. Now, Nvidia reported a revenue of 46.7 billion and earnings per share of $1.04, both beating the expectations. Now, revenue grew 56% on a year-over-year basis. Earnings per share grew 67%. Absolutely insane. Now, the guide was absolutely crazy. It's very weird the stock was down. The market estimate, the consensus estimate for guidance was for $46.7 billion. Nvidia came out and said we are looking at a $54 billion guide for Q3. Nvidia also went ahead and approved a $60 billion share buyback. And on all of this, the stock was down 2.4%. So it really goes to show how much was priced into the stock. But look at this revenue trend, absolutely insane. However, guys, there were definitely some cracks that we do need to talk about, right? And it has to do with this data center component right here. Now, data center, right, grew from 26 billion to 41 billion, which is 56% growth. Absolutely insane. And then on a sequential basis, it grew about $2 billion, which is about 5%. But when you actually break down the data center into its compute and networking, right, we actually saw that the compute segment, which is the actual GPU sales, fell on a sequential basis. The reason why this was positive had to do with their networking component, which actually grew about 80% on the quarter. Now, the actual guide for data centers, right, was for 41.2 billion. So technically speaking, Nvidia actually missed the analyst consensus estimates for data center, which is their massive growth driver, as you can see right here in the numbers. Compute sales, like I said, fell sequentially. It kept together by networking. Ultimately, the reason why the stock is not down like 10 or 15% on the back of this has to do with the absolute insane guide. But all in all, when we look at this, right, and we are starting to see a couple of small cracks appear in the AI trade. Now, if you hold Nvidia, don't sell this earnings report and the guide, the stock's likely going to go to $200 over the next couple of months. But again, small cracks starting to form here and there. These are the nuanced stuff that we need to look at, and I'm going to dive into it in much more detail and nuance on the second YouTube channel. It's going to be out in a couple of hours. Go ahead, like and subscribe at FinFluential Media. I'll leave it in the comment section below so you guys don't miss it as well. And on the back of Nvidia's earnings, CoreWeave was actually flat, mostly because of that guide, a guide going much higher. It's very positive for CoreWeave, and that's after the stock was up 6% today. CoreWeave also got a price target upgrade from Cantor Fitzgerald. They have a price target of $116. I actually added a CoreWeave position today, and Cantor cited the AI market potential and favorable valuation compared to peers. That's why it gave CoreWeave an overweight rating. Now, Cracker Barrel, guys, was up 8% today after it came out and said it's going back to its original logo right here from this new one that saw massive public backlash. And investors really like that, rewarding the stock, which was up 8% today. And then American Eagle shares jumped 8% today after announcing a collaboration with Kansas City Chiefs star Travis Kelce, I don't know how to say his name, a day after the football player announced his engagement to Taylor Swift. So American Eagle firing on all cylinders here. And then for everything we saw today, guys, there was 3,500 advances, 2,700 decliners. We saw net outflows in the Nasdaq and the New York Stock Exchange. The S&P 500 was up. However, if you include the gap up from here, we actually did see inflows in the market. And then market momentum continues to remain solid. Everything from the 5-day to the 200-day looking robust. And market momentum continues to be on the side of the bulls. Now, guys, looking at the chart right here, you can actually see a fairly green day for equities, green for the mega caps, but outperformance in the RSP. That's the equal weighted S&P 500. Mid caps and small caps also continue to outperform, and you can see a growth outperforming value. Now, we also had Nvidia here on the chart because everything is going to be dependent on Nvidia's earnings. Now, Nvidia was flat on the day, but we can see that they are down about 2.4% here in the after hours. So a pretty muted move. I do think the stock's going to $200. I think ultimately, if we get any significant weakness, if we potentially even see the $153 market in September, that would be a buy the dip opportunity, but I don't think it's going to go that low. I think at most, maybe the 170 area, we see Nvidia pull back to there, and then onward and upward to the $200 area. That guide was very strong, and I think the market's just going to brush this off in the next couple of weeks. And you can even see it in the after hours, right? Actually looking a little bit positive. So Nvidia's earnings aren't having a massive move on the futures market. And then we just opened the PM session here for futures. Very interesting. European stocks were flat. Middle Eastern stocks gained significantly. China stocks were down 2.7%. And then India stocks gained 1/4%. Crypto is still churning. Bitcoin flat, Ethereum down 1% of the day, but still holding these very, very key levels. And after the massive moves we've seen in crypto, it's what you want, right? You want to see a bit of digestion, a bit of rotation, digestion and rotation of a bull market. And we actually see that right here in equities. You could see, look at the S&P 600, look at the RSP, right? Even though the S&P 500 hasn't really done much of anything, we sort of just churned in this area for a while. I mean, even though the S&P 500 hasn't done much of anything here on the daily chart, you could see we sort of just traded in this range. We are definitely seeing a rotation into some of these smaller names. And again, like I said, it is the lifeblood of a bull market. Volatility was up ever so slightly. Yields actually fell and the dollar was flat. So the market certainly pricing in rate cuts for September and through the end of the year. Goldman came out in a note and said yesterday, Goldman came out and said they expect a 25 basis point cut every Fed meeting for the next 4 meetings for a 1% cut in the Fed funds rate to take us to the neutral level. Very, very interesting. And then we saw silver was down, gold was up ever so slightly, TLT was flat. Very interesting trade. Yeah, now looking at the S&P 500, we actually did hit an all-time closing high and an intraday high here for the S&P 500. Very, very interesting. Very bullish stuff. And we continue to be on this absolute bull trend from these tariff tantrum lows. And we just continue to grind higher, making higher highs, higher lows. Now, do be aware that in the month of September, we can actually see a little bit of volatility, and we may actually get that volatility. But ultimately, as long as we stay above the 6100 area, and I would even go as far as to say the 5800 area, as long as we stay sort of above this level right here where we made this gap up, we can pull back as far as here, find support, and then we will probably go ahead and take out those all-time highs through the end of the year into early 2026. That would be the most healthy thing for market if we could actually just get like a pullback, a re-rate, and then go from there. Go ahead, break the all-time highs. That will just signal a trend continuation in this market for the S&P 500. Now, the Nasdaq 100 looks a little bit worse than the S&P 500. The S&P 500 made an all-time high today. The Nasdaq 100 pretty much at its highs, but again, still churning right here. And I think we will continue to see churn tomorrow, especially after Nvidia's earnings. And Nvidia's proxies will also continue to churn. That being said, I am bullish on Nvidia. I do think the stock goes higher. I do think we see 200. And again, like I said, you want to buy anything at the 170 area, looking for just a continuation of this momentum that we've seen, not just this year, but that we've seen probably over the last 5 years. Coming off these lows right here. Absolutely insane move we've seen from Nvidia, and do expect a $200 price target for Nvidia. I think we're going to see a lot of price target raises, especially after that massive guy that smashed the streets expectations. But again, to only see the stock, down 2.27% really goes to show how much was already priced in. Now, looking at the RSP, guys, pretty much at an all-time high. I think we're seeing some very resilient action here in the RSP. We're seeing very same price action in mid-caps. Is that a new all-time high for mid-caps intraday? Let's go ahead and look at the weekly chart. No, not quite a new all-time high, but but we're definitely looking strong here on the daily chart. The SP 600 also looking very, very strong. I believe that's a 52-week high for the SP 600. So very, very strong stuff right here. The market's looking really good, guys. We are in a bull market. Guys, we are in a bull market, and pretty much any dips we do get in this market, you want to buy those dips in the S&P 500, the Nasdaq, even the RSP right now when we're seeing small caps and the broad market outperform in stuff like Nvidia. Other names I do like, I've been speaking about this name a lot, Lemonade. If we do get a dip in this name, even anything below 50, buy those dips because I do think we're going to go higher. I think this is a $100 stock in the next 18 months. But I think CoreWeave is another great name. If you think you missed a trend, CoreWeave is actually trading at about a 5 times revenue multiple on this year's earnings, about a 4 times revenue multiple on next year's earnings. It's about a $50 billion market cap right here. The company's looking to do close to $10 billion next year. $10 billion next year. So, and we could see upside estimates to that, maybe 11, maybe even $12 billion. That's what the street is penciling in right now. So I do think we also find some great support right here for CoreWeave. I was pounding the boat, say buy, but use some cash secured puts to go ahead and get into this position. If we do roll over, we would roll it down to $65, but it looks like we are finding support right here. I do think that we are probably going to continue to churn in a very wide range as it's a volatile stock, but on the back of Nvidia's earnings, we can actually see the CoreWeave is up 1.37%. So the market's saying, hey, looking at the guide, it's going to benefit CoreWeave. With Nvidia down 2%, this is telling you everything you need to know. I do think we probably are going to go ahead and test these highs before the end of the year for CoreWeave at the 150, 148 area. And potentially all-time highs at the 185, but let's not get too ahead of ourselves. Let's look at one target at the time. We found support right here. Let's go ahead and target the 150 area. And our immediate interim target for CoreWeave would be the $104 area. By the way, I officially have a position in CoreWeave. I'm in at about the $93 level here. Only got 100 shares, nothing crazy, not a huge part of my portfolio. I will add more if we do find strength and the fundamentals do continue to improve year for CoreWeave. But let's go ahead and quickly look at Bitcoin and Ethereum. I know you guys love it in the comments. I see you guys absolutely love me talking about crypto, so we will continue to do that. Now, guys, yesterday I said Bitcoin is following the exact same path it normally does. You can see when we put a low, we then make a lower low, and then we rip to the upside. That's what we normally do. We did it here. We did it right here. We ripped to the upside, and we're doing it right here. And I do expect us to rip at least at the very minimum to the 124,000 area. M2 money supply is telling us we're going to go to the 140,000 area. Looking at Ethereum, there's much more relative strength. Look at this chart. This is literally like we put in a low, higher low, and now forming another higher low. In the context of making all-time highs for Ethereum, I think we're going to see 6,000 in very short order for Ethereum. We just got to digest all of this massive move. For those of you that don't know, if we actually just take a measured move from these lows right here all the way to the all-time highs, that's a 173% move from those lows. Absolutely insane price action. And Ethereum at this point, that was the 7th of May. So we've seen a massive move up. I do think we're going to continue to go higher. We do have to digest this, but as long as we digest all of this price action and we stay above the 4,000 price area for Ethereum, that's a buy the dip opportunity. Bob's your uncle. And then we'll probably see 4,000 area in very short order. Guys, let's actually look at the 2-year yield dropping like a waterfall right here. I think the market is now expecting 80 basis points worth of rate cuts through the end of the year. Or the Fed, like I said, Goldman is expecting us to get about 100 worth of base rate cuts through January 2026. So it looks like the market is pricing that in. The 10-year yield continues to fall as well. We continue to be in this very key downtrend. In fact, it looks like that downtrend is now like accelerating to the downside. I think we're going to see 4.1, potentially even below the 4 level before the end of the year in the 10-year yield. And that's going to be very good for businesses, mortgages, etc. That's going to be very good for businesses and mortgage holders, etc. Just going to take a bit of the pain away, and that's going to help the consumer in the interim. It's going to help the residential fixed investment market. It's going to help the commercial market. It's also going to help the industrial market. And that, my base case for 2026 is for stuff like industrials and the residential fixed investment market to spur economic growth, and then we'll have the flow-on effects of that, which will impact the consumer. So that's sort of what I'm believing will drive growth as we do get a slightly weakening of a consumer in the first half of 2026. And then the consumer to pick up at the back end, assuming the labor market holds steady, which I think it is, because Donald Trump came out and said the new jobs numbers are going to be through the roof from new hiring. So they're obviously going to change the BLS estimates as to how they do it. It's going to juice up the jobs numbers. And whether you think it's good or bad, the fact of the matter is the algos are going to see this as a positive and take us higher. So we want to trade the data. This is what the data is going to be. So ultimately, as long as the labor market holds up, as long as the market thinks the labor market is holding up, that is just fuel for upside momentum. And that is ultimately not priced into the market. At least I don't think just yet. Guys, and diving into sentiment, this is the fear and greed index. And we pushed yesterday from neutral into the greed zone. So market euphoria still up there. The market's still feeling the bullish momentum, but we are not in extreme greed. And this does tell us we do have room to run. But coupled with where we are in sentiment, when we look at FINRA margin debt, we are officially sitting at all-time highs with the S&P 500 at all-time highs. Generally speaking, when we get to highs, right, we normally do see a little bit of a pullback here in the S&P 500. However, guys, despite FINRA margin debt being at all-time highs, this isn't really a reason to get bearish, because when we look at FINRA margin debt as a percentage of S&P 500 market cap, while we are not at the lows, we are pretty much at some of the lowest levels pretty much ever. We're at 1.8%. You can see when we get to 3.3%, that's when you should start to worry. That was where we were in 2008, the GFC, the great financial crisis. So where we are right now, FINRA margin debt can probably even double, and it still wouldn't be extreme. And what you also have to understand, with the markets at all-time highs, it's supported by fundamentals. We've seen immense growth in the Mag 7 that has supported the majority of returns over the last 12, 18, even 24 months. But that is set to expand, and we are set to see accelerating earnings growth in the other 493. For Q3 and Q4, we're looking for about 4% earnings growth, and then that is going to jump to 9%, 10%, and then 14% respectively in 2026. So where we should see stabilizing earnings estimates in the Mag 7 anywhere from 10 to 15%. That is about the level. Still very, very strong growth right here. However, stabilizing growth and accelerating growth in the other 493. And this is why you definitely want exposure to small caps, mid caps, and the broad market. At the same time, what could also help stocks in the near term is that buybacks are officially exiting their buyback blackout period. This is where we are right now. And by the end of this week, 92% of S&P 500 companies will be out of their buyback blackout period, and buybacks will be fully underway. Something else supporting this market is the macro. And guys, when we look at Q3 GDP estimates, still above the 2% mark at 2.1%, very, very solid stuff. And furthermore, despite elevated economic uncertainty, we've seen that in some of the surveys, private equities have seen a sharp increase in exit activity compared to the first half of 2024. This is very, very good. This is telling us that we are seeing liquidity in the private markets, and that can be extended to the public markets as well. At the same time, when we look at the consumer, the Redbook Index printed a 6.3% growth from the same time last year. Absolutely insane. The Redbook Index is a great indicator for weekly retail sales, and things are still looking very, very strong. And all of this data is telling us the consumer is still looking good, the public market's looking good, liquidity looking good, GDP looking good, and ultimately any dip we do get in this market in the month of September, buy that dip. Now, looking ahead tomorrow, the big data point is going to be the GDP estimates. We need a 3%, otherwise things can go off the rails. Then on Friday, we get inflation data. But tomorrow, this is going to be the big number we're all going to be focused on. The big name earnings Nvidia is officially behind us. Go check the second YouTube channel. We have a video up and running there. Tomorrow, Best Buy and Dollar General are reporting before the open. Dick's Sporting Goods is also reporting. And then after the close, we have Dell, Marvell, Affirm, Ulta Beauty, Webull, Autodesk, Sentinel One, Iris Energy, ticker symbol IRON. So some very, very big names right here. I might do a video for all of these names, or particularly Webull, Dell, and maybe IRON as well. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.